Welcome back to the Dinar Chronicle, your trusted source for real-time updates on global currency movements, financial developments, and the truth behind the headlines. If you're holding dinar or dong, or just following the developments closely, today's report could mark a significant turning point. In the past 48 hours, multiple credible sources across both banking sectors and regional financial institutions are now reporting an upward shift in the exchange rates for both the Iraqi dinar and the Vietnamese dong, particularly in Tier 1 and Tier 2 banks. While the situation remains fluid and not every branch is confirming these adjustments publicly, insider confirmations and transactional evidence suggest that a revaluation window may be slowly unfolding behind closed doors. Let's start with the Iraqi dinar. Reports are coming in from clients in specific metropolitan areas, including Dallas, Miami, and Atlanta, who've been told privately by their financial advisors that higher than normal rates are showing internally on certain bank screens. Though these banks are not advertising new rates to the general public, internal memos indicate that the IQD is being flagged for tiered release protocols, meaning it may be accessible to certain clients under non-disclosure or wealth level agreements. A source at a regional bank branch in Texas confirmed that their system briefly showed a rate above $3.90 earlier today, which was promptly removed and marked as a test feed. However, when cross-checked with global Forex rate aggregators, those changes were not visible to the retail Forex platforms, indicating this may be part of an internal rollout process. Now on to the Vietnamese dong. Similar whispers have emerged from West Coast banking hubs where, again, certain clients, mostly high-net-worth individuals or those previously pre-screened for foreign currency exchanges, are reporting offers as high as 48 cents per dong. For comparison, the publicly traded rate for VND has hovered between $0.000043 and $0.000045 for the past several years. A rate above even a few cents represents a historic leap in value, suggesting either a currency stabilization initiative or a quietly implemented sovereign adjustment. In either case, we're likely witnessing the earliest stages of what many have called the global currency reset, where undervalued fiat currencies are realigned to better reflect their nation's real assets and economic contributions. But before we get ahead of ourselves, let's take a look at what the banking infrastructure is actually doing right now. Many financial institutions are beginning to use tiered clearance procedures. These are phased mechanisms that allow for internal changes in exchange rates without making them visible to the wider public. Bankers we've spoken to, both on and off the record, say this is a tactic commonly used in major financial restructures to avoid public panic, large-scale hoarding, or speculative arbitrage. According to a compliance officer at a top 10 U.S. bank, these kinds of rollouts are highly controlled, legally sensitive, and often involve back-end coordination with treasury departments and international monetary entities. The implications for those holding dinar or dong are enormous. If these rates are confirmed and made available on a larger scale, we could see unprecedented value shifts in portfolios that were once considered speculative at best. It's also worth noting that this is not happening in isolation. As of this morning, the IMF released a confidential bulletin to member banks discussing the re-evaluation of currency parity in post-conflict economies, an indirect but telling sign that Iraq's economic revival may be entering a new phase. Moreover, Vietnam's recent tightening of capital outflows and adjustments to its central bank's monetary policy hint that something more coordinated could be in motion behind the scenes. Adding more weight to these developments are movements within global gold reserves. Central banks, including those in BRICS nations, have been quietly accumulating gold at record pace. Some analysts speculate that this is to prepare for a shift toward asset-backed currencies, a move that would force traditional fiat-based exchange models to recalibrate dramatically. In this scenario, the Iraqi dinar, widely believed to be backed by oil, gold, and mineral assets, could rapidly appreciate as markets begin pricing in Iraq's true resource wealth. Similarly, the dong's potential revaluation could reflect Vietnam's manufacturing boom, recent international trade agreements, and its strong pivot toward digitized exports and supply chain infrastructure. There's also chatter among private exchange groups and Tier 4B participants, individuals and entities said to be part of pre-release groups for currency redemption. Some of these groups claim to have received notifications this week to prepare for processing, and a few even report being contacted for appointments. While unconfirmed by major institutions, the consistency of these reports across states like Florida, Arizona, and Nevada lends some legitimacy to the idea that limited transactions may have already begun. One question viewers keep asking is, why aren't these changes reflected on platforms like xe.com, Forex.com, or even Bloomberg's currency feeds? The answer is timing, protocol, and controlled rollout. When a sovereign nation revalues its currency, especially under pressure from international regulators, IMF conditionalities, or debt restructuring agreements, it doesn't necessarily do so with immediate fanfare. Quiet implementation is often preferred to prevent economic shocks. Digital test rates, in-bank memos, and selective exchanges help manage the flow of funds while limiting exposure. Essentially, we may be in a gray window between institutional implementation and public availability. It's critical to be cautious. Not every bank employee is going to confirm this. Many frontline tellers are unaware of back-end system tests. Some regional branches may deny any changes, not out of dishonesty but simply due to compartmentalized information structures. The fact remains, however, that too many aligned signals, from transaction-level confirmations to institutional movements, are surfacing simultaneously to be dismissed entirely. There's also geopolitical significance here. Iraq's recent summit with Saudi Arabia and other OPEC Plus members included discussions around moving oil transactions off the dollar standard. If these nations proceed with a commodity-backed exchange system or alternate settlement structures, it will force Western financial systems to adjust the valuation of participating currencies, including the dinar. Vietnam, on the other hand, is a growing ally to both the US and China and is being courted heavily by international manufacturing sectors. As supply chains move away from China, Vietnam stands to become a central hub, raising the real-world value of its currency. At the Dinar Chronicle, we've been tracking these developments for over a decade. While false alarms are not uncommon in the currency revaluation world, the current convergence of data points is unique. Real people are reporting real rate changes. Systems are showing anomalies. Treasury departments are unusually quiet, and yet institutional behaviors suggest they are actively managing something behind closed doors. So what should dinar and dong holders do now? Stay informed, remain patient, and document everything. If you're contacted by a bank, request written confirmation of rates before any transaction. Be wary of anyone asking for upfront payments or processing fees. And above all, consult with legal and financial advisors who understand foreign currency transactions and the compliance frameworks surrounding them.